financial metrics can seem like a foreign language to most, but are important to understand when it comes to ensuring the best for your real estate investments. In this video, we will cover 11 terms to help get you acclimated to the vocabulary. Cash flow is the actual money left over each month after collecting rent and paying all expenses. The debt service coverage ratio is the net operating income divided by annual debt payments.
A loan-to-value ratio is the mortgage amount divided by the property's appraised
Property
value.
management fees are the percentage of gross rental income paid to professional property managers for tenant screening, rent collection, maintenance coordination, and day-to-day operations. The absorption rate refers to how quickly rental units or properties sell in a specific market. Rent comps are comparable rental rates for similar properties in the same area. An operating expense ratio is the operating expense divided by gross rental income, showing what percentage of income goes toward running the property. The break-even ratio is the occupancy rate needed to cover all operating expenses and debt service. Market rent is the rental rate a property could collect in the current market. An effective rent is the actual rental income after accounting for concessions like free months, reduced rates, or tenant improvement allowances. EBITDA stands for the earnings before interest, taxes, depreciation, and amortization, and serves as a measure of a property or company's operating performance. Understanding these terms is paramount in navigating the real estate market. But if you have any questions about anything we have just covered, feel free to contact a member of our team.